Welcome to my channel. I'm the covered call guy, and my goal is to create a $120,000 passive income portfolio using only covered call ETFs. But with the way you guys are sending me all these other stuff and getting me intrigued, I don't know. But I'm gonna try to use only covered call ETFs, and right now I yield about $72,000 a year, about a little over $6,000 a month, almost $1,400 a week, and about $200 per day. I will be updating this at the end of December, so hopefully I'll reach or be over $75,000 a year. Legal disclaimer before we start though, this content is for information and educational purpose only and should never be considered financial investment or tax advice because I am not a licensed financial advisor, investment professional, or tax expert. All opinions expressed are my own and may be inaccurate or incomplete or just flat out wrong. Investing and trading involves significant risk, including possible loss of principal. So please always conduct your own due diligence and consult with a qualified licensed professional before making any financial or investment decisions. Remember, I am just some random idiot you found on YouTube, and I could be completely wrong. Now, today's video is going to be from a I totally forgot. I did forget about you, but I didn't forget about you because you requested this. However, I forgot because I was gonna put a shout out to you, but I didn't write your name down, and I can't find it in the comments now. But thank you for leaving everything in the comments like I asked at the end of my video. And for those who want a deep dive on something, let me know. Leave a comment. I'll do my best to give you a shout out that you requested it. I'm sorry. But you're the only one that requested this one that I've seen so far, so you know who you are if you're watching. Anyways, the ticker symbol is SEMY from GraniteShares. It is a YieldBOOST Semiconductor ETF. So, explained simply, this is the income machine for chip stocks. For those who want to invest in chips and want to bet a little bit more, this is the yield boost for it. Let's get started. All right, the big idea. What is the big idea behind this ETF, right? So I'm gonna try to break this down simply. This isn't a stock you want to buy and hold for 10 years to watch it grow slowly. No. This is a volatility monetization instrument, basically an income machine. The goal here is to pay you cash every single week. The hook though, it pays a massive amount of cash, right? I think it's over like 100 to 140 or 50% per year annualized. But it does this by making complicated bets on the semiconductor computer chip market, right? We can go so much higher is how I think of it, the thesis, right? And I try to put in quotes complicated bets because it's more, look, let's be real, right? It's more speculations. You're kind of, I'm gonna say you're gambling at this point, right? I just didn't want to put it there because obviously, it is a complicated bet, and if you want to get technical, right? But if you're doing 3x leverage, you're gambling, right? I mean, it is a bet. All right, too long, didn't read, don't care about my opinion. This is just the three things. I'm gonna break it down, and you can go ahead and end the video. The goal for this ETF, if you invest, is cash flow. You buy this for weekly paychecks. You do not buy this for long-term growth, in my opinion. The strategy is the insurance. You buy this because if it gives you the insurance, it doesn't just buy chip stocks. It sells quote unquote insurance contracts, the options on triple leverage chips to fund chip funds to generate fees. The risk highest, extremely high, 10 out of 10. All right, this is speculative. It pays high fees because it takes on high risk. Please do not put your life savings here. I know for a fact some people all in, or at least like put more than 50% of their portfolio into leverage. Why would you do that? Please don't do that. Why is the yield so high? Of course, you gotta explain the yield, right? When you go and search this up, I want to explain the volatility multipliers, and as simple as I can. Normal chip stocks move fast, right? You've seen about this entire year, basically, for the most part. Maybe not the past month or so, but for the most part, starting of the year, AI chips and AI stocks just boomed, right? So this fund tracks a version of its underlying SOXL, I believe, that moves 3 times as fast. If normal stocks move 1%, this moves 3%. Because the movement is so wild, the quote unquote I said insurance, right? The option premiums on it are incredibly expensive. This fund collects those expensive fees and passes them to you as income. Right? The casino philosophy, right? So just this is my quote. This is how I see it, especially for those who are new. Okay, if you're new, this is a casino. Please don't put too much money into this. If you're a gambling man, sure, right? So think of it as being the house in a casino. Traders love to gamble on chip stocks. This fund takes their bet, collects their fees, and pays you the income. That's all it is, but 3x. Right, the boring but important details, structure and launch is an ETF you can buy and sell just like a stock. It's launched recently, November 18, 2025, I believe. The advisor is GraniteShares Advisor LLC, so a lot of it is in-house. Good. I always say that's a good thing. The listing is on NASDAQ, ticker SEMY. Cost and size, I think the expense ratio is what, 1.07% per year, right? I could be wrong. Anyways, I think it's that. This is pricey compared to a boring index fund if you're boring, right? Because why would you invest in this if you're boring? Obviously, right? This is a cover call, do a 3x cover call, right? But standard for complex funds, the size is 10 million, very small, just above micro cap or just like pretty much above, you know. It could go either way at this point. It is a new fund with a small amount of money, so be careful trading huge amount at once because you may get in, but you may not get out. Warning, your tax bill, Form 1099, you get a standard tax form, no complicated K1s. Income and versus ROC, sometimes you pay income tax, sometimes as return of capital. ROC, it just means they're technically giving your own money back, right? You have to figure out if it's good ROC or bad ROC or destructive ROC, right? And it changes. 1 week is 92% ROC, the next is 27%. Don't treat this like a simple savings account. It complicates your taxes. The engine, right? The underlying SOXL. This fund mixes money by looking at SOXL. Basically, it is a fund that tries to triple the daily move of chip stocks. The danger is the decay. Triple leverage is great for one day, but over time it decays. If the market chops up and down, SOXL loses value since SEMY, however you guys pronounce it, relies on SOXL, this decay is a risk for you too, okay? So understand that. I talk about leverage decay a lot. I talk about the drag. You can get kind of beat both ways. That's why this is a gambling stock. All right, how the trade works, the strategy behind it, selling puts. The fund essentially promises to buy SOXL. If it drops to a certain price, in exchange for this promise, they get paid cash instantly. All right, this is an aggressive strategy. Usually you buy insurance to protect yourself if the market crashes. This fund focuses on maximum income, meaning if the market crashes, the fund takes the hit. When you get paid, weekly paycheck, I believe it pays weekly. I could be wrong. Double check on that, please. The fund pays you cash every week. The buffer, they usually bet that price won't drop more than 3 to 6%. If it stays within that range, you keep the money. Money in the bank. To make these bets, they hold cash in U.S. Treasury bills, right? It's a collateral, essentially. Safe government debt, earning a little extra interest on the side. So you kind of get both. Proof of payment, right? Look at these payment. 1 week, the yield is 141%. The next is it's 136. So I use the last 3. Right, so it's right now the paycheck is consistent. I'm guessing they're trying to keep it around that range, but you can see here it's just kind of crazy, right? November 26th, they estimate it to be mostly ROC. December 4th, mostly ROC, and then December 11th, mostly income is what they're estimating and telling you. Right, my takeaway: that paycheck changes every week. Don't assume it will always be the same because with these type of yields, with leverage, I mean, you're kind of playing with fire, right? So I don't even know how you want to play this. I mean, if you're really super aggressive and you don't really mind that type of swing and risk, sure. The catch: why didn't you get rich, right? The market rallied 35%, you made 9%. That is the trade-off. The chip market rally huge, plus 35%, but this fund only went up 9% total. Why? Because you agreed to cap your upside in exchange for that weekly paycheck. So that 3x leverage may look nice, but it doesn't always mean you're gonna get that same 3x growth. How you can lose money. It's a saying, eating your own tail. If the fund pays out more cash than it earns trading, the share price drops. It's called NAV erosion, right? I'm sure you know. I feel like if you were to ask for this deep dive, you kind of know about this, right? Especially with these leverage and extremely high yield. That's like the first thing that pops up. The crash risk. If the market tanks, you lose money fast. If the market recovers quickly in a V shape, you don't recover as fast because your gains are capped. So please keep that in mind. Okay? Take WPay for example. The concentration. It's 100% computer chips. If the chip industry fails, this fund fails. But that's very highly unlikely. I mean, that would mean technology goes away itself, right? But or Taiwan gets taken over, then I could see it really imploding at that point. And also because remember, it is just about a $10 million asset under management fund, so be careful of that. Something to keep in mind. Assets under management matters. Other funds like this, right? We always want to compare it to its peers and competitors, right? There are other versions of this strategy for Nvidia, Tesla, SOML, or NVYY, TSYY, QBY, right? So SEMY is competitive with the others here. You can see here, they're all selling puts. The yield is roughly the same with the exception of NVYY. So, yeah, pick your poison. Predicting the future, right? What happens to your money in different markets? I like to do scenario. This is a scenario with a grain of salt, so I could be completely wrong. I just input my own formula and my own. I try to be unbiased, but with leverage, it's very hard to because it can, as much as it can take you to the moon, it will drag you back down. The best case, I'm gonna say flat market. The market does nothing and you collect a fat check. The worst case is a crash. The market tanks and you lose money fast. And of course, the bull market, you completely miss out on all of the gains, right? Huge rally, the market booms to the moon and you barely move up because you're capped and it's weekly. You go up for sure, all right? So you just missed out on it. It's not going to be like the worst case, right? The best case is like a choppy flat market. The market does nothing and you collect a fat check. And of course, the second best scenario is a huge rally. And of course, the worst is the crash. My verdict, I believe this fund does exactly what it says. It creates huge yield from volatility, but that 140% isn't free money, okay? You are being paid to take the risk that the market might crash, and you are agreeing to give up big gains if the market rallies. So that's it's doing what it says it's doing, right? So it's not lying to you. Okay, I guess that's a green flag. But that 140% yield, it's something to be aware of. If you get into this is something you have to track every single day. I would say like every other hour or every hour or so. So something to really look at. Especially if it's a decent portion of your portfolio. It can absolutely tank your entire portfolio. Buy SEMY if you want cash now, not a growth later. You value income first, principal second. You think the chip market will be boring. It works best when the market is flat or just slightly choppy. You're okay with seeing your account drop, like I mentioned before, right? You must be prepared for violent swings in your balance. Avoid SEMY if you think the chip stock are going to the moon. You might as well just buy the stock instead, in my opinion. You miss out on the rally with this fund, right? You might as well buy the underlying. You panic when you see red numbers. If you're new, right, you panic when you see red numbers. You need capital stability. This is not appropriate for you, right? You want a safe type of savings account, right? This is not safe. It behaves like a complex trading strategy, not a bond. If you want something bond-like, there are other great cover call ETFs and other funds. And this is a summary sheet, right? These are just the hard numbers as of December 2025. As at the time of this video, the current price was $23.73. Underlying asset is SOXL, 3x leverage semis. Annualized yields was about 136.50. Expense ratio was 1.07%. And it distributed and paid you out weekly. Thanks for watching. Subscribe, comment, like. I hope you got something out of this video. If not, then I'm sorry I did a bad job. But I try to break it down so as simple and easy as possible to understand. Perhaps I'll do another deep dive part 2 if you want it, even a deeper deep dive. I don't know how much more I can give because it is a leveraged stock, right? So basically when you buy into something like this, you're waiting for the massive payout, but you're also gonna have to just see how W pays. W pay functions. That W pay is a little bit more slightly. I don't even say the word conservative, but you know, obviously different sectors. But yeah, if you want to get your foot wet, probably W pay would be the better quote unquote choice. But thanks for watching. I appreciate it. Leave a comment on anything else you want to see. And I always appreciate you guys leaving a comment and giving me new ideas because I need them. I have a lot of ideas and I have a lot of stuff I want to make, but they might not be the best video. So I'd rather just make something you guys want to watch. Thanks for watching. Catch you guys on the next. Stay tuned.